Consumer prices climbed 1.2% in August compared with July, with the largest price increases recorded in the transport sector, up 12%. That's according to the Statistics Centre Abu Dhabi. In a statement, the centre said that the food and beverages group saw the second largest price jump of 2.1%. In late July, the UAE's Ministry of Energy announced it would cut its fuel subsidies and link fuel prices to global prices starting August this year. The initiative resulted in a significant hike in petrol prices, with a litre of Special 95 jumping 24%. Though consumer prices in Abu Dhabi have been increasing over the past month, the rate of growth has been below 1% every month, with prices edging up 0.2% in April 2015. According to the Statistics Centre Abu Dhabi, the consumer price index went up 1% in Abu Dhabi, 1.6% in Al Ain and 1.2% in the Western region. Abu Dhabi contributed the largest share at 58.7% of the overall increase, followed by Al Ain and the Western region. The report also revealed that the 1.2% increase in consumer prices in August impacted prices for Emirati households, non-Emirati and shared households by rises of 1.5%, 1% and 0.9% respectively. Meanwhile, households in the bottom welfare level saw a 1.2% increase in consumer prices, while those of the middle saw a 1.5% rise, and those in the top welfare level saw a 0.9% increase. And new statistics released by Abu Dhabi Ports, the master developer, operator and manager of ports and industrial zones in the Emirate, showed that it is handling more cargo than ever before. At the Khalifa Port Container Terminal, which is operated by Abu Dhabi Terminals, container volumes increased by 41% in the first 7 months of the year compared to the same period in 2014. Bolstered by rapid growth in polymer exports and transshipment activity across the Gulf, over 772,000 20-foot equivalent units were handled in the period, up from 549,000 TEU from the previous year. In the same period, general and bulk cargo saw growth of 21% to 8.71 million freight tons. In 2015, all roll-on roll-off operations were transferred to Khalifa Port from Zayed Port in the light of the growing UAE market for the automotive sector. This transition to Khalifa Port saw volume increase by 11%, given the improved efficiencies and quicker turnaround times in port, which today offers a capacity of about 350,000 vehicles a year. Nakheel has signed 3 contracts worth a combined 2.4 billion dirhams to build 1,500 new homes within the Nad Al Sheba district. The company said in a statement that the homes will be a mix of villas for lease and for serviced accommodation, which have been split into 3 packages. The biggest contract, worth 830 million dirhams, has been awarded to Abu Dhabi-based Trojan Contracting and is for main community infrastructure works and the construction of 489 villas. The second, for Dubai-based United Engineering Construction, is worth 789 million dirhams, and a 781 million dirham deal has been granted to Abu Dhabi's Mitak General Contracting. Nakheel initially announced that it would build 900 villas and 100 serviced apartments at the site last year, but has subsequently increased the volume of homes on the plot. It added that the community is likely to be ready by 2018. Emirates Telecommunications Group, the Arabian Gulf's largest wireless carrier, has seen its shares rise as foreign investors were allowed to trade the shares directly for the first time. The Abu Dhabi-based company, known as Etisalat, gained 2.8% to 14 dirham 65 as of 10:05 a.m. in the Emirate, on more than 11 times the 3-month average trading volume. The stock was the biggest contributor to the ADX General Index's 0.5% advance. Etisalat shares have jumped 22% since the government-controlled company announced 3 months ago it would allow non-UAE nationals direct ownership. Stock markets in the GCC have stepped up efforts to attract foreign investment to the capital markets amid the slump in oil prices, one of the region's biggest sources of income. Saudi Arabia gave foreigners restricted direct access to its equities market in June. The UAE's sovereign wealth fund, Emirates Investment Authority, which owns 60% of Etisalat, has said it doesn't plan to reduce its holdings, while the government also limited foreign ownership of the shares to 20%.